Welcome to SS2 Commerce. Today we study marine and aviation insurance, two specialist classes of insurance that protect the movement of goods and people by sea and air. These are among the oldest and most important insurance types, enabling international trade and aviation by managing the enormous risks involved. Before studying marine and aviation insurance specifically, let us recall the 6 key principles of insurance that apply to all classes. 1. Utmost good faith. Both insurer and insured must disclose all material facts relevant to the risk. 2. Insurable interest. The insured must have a financial stake in the subject matter. You cannot insure something you do not own or have interest in. 3. Indemnity. After a loss, the insured is restored to their financial position before the loss, no profit from insurance. 4. Subrogation. After paying a claim, the insurer takes over the insured legal rights to recover from the party responsible. 5. Contribution. If multiple policies exist, they share the claim proportionally, prevents double recovery. 6. Proximate cause. Only the nearest, most immediate cause of loss is considered, must be a covered peril. Marine insurance covers risks associated with the transportation of goods and vessels by sea and, in a modern context, by inland waterways and air cargo insurance. Marine insurance is one of the oldest forms of insurance. The Lloyd/S Coffee House in London began marine insurance in the 1680s, and Edward Lloyd/S establishment became the world-famous Lloyd/S of London insurance market. Types of marine insurance. 1. Cargo insurance. Marine cargo covers goods being transported by sea against loss or damage. Covers shipwreck/sinking, fire, theft, jettison, throwing goods overboard in emergency, piracy, flooding of hold. Types of cargo cover. Institute cargo clauses. A. All risks widest cover, covers all losses except those specifically excluded. Institute cargo clauses. B. Covers specific named perils, fire, explosion, stranding, sinking, collision. Institute cargo clauses. C. Narrowest, covers only major casualties. 2. All insurance, marine hull. Covers the ship itself against physical damage. Covers collision, fire, storm damage, grounding. Shipowners must have hull insurance to operate vessels. 3. Freight insurance. Covers the shipowner against loss of freight revenue if cargo is lost before delivery. 4. Protection and indemnity, P&I, insurance. Covers shipowner liability, crew injuries, cargo damage, oil spills, wreck removal. P&I clubs, mutual insurance associations of shipowners, UK P&I Club, West of England P&I Club. Key marine insurance documents. Marine insurance policy, the contract between insurer and insured. Certificate of insurance, evidence of insurance, required by banks for letters of credit. Survey report, independent surveyor/S assessment of cargo condition and cause of loss. Protest, see protest captain/S sworn statement of facts when a casualty occurs. Aviation insurance covers risks associated with aircraft operations. It is one of the most technical and expensive insurance classes due to the catastrophic potential of aviation accidents. Types of aviation insurance. 1. All insurance, aircraft hull. Covers the aircraft itself against physical damage, crash, collision, fire. 2 types. All risks ground and flight, covers aircraft at all times. All risks ground only, covers aircraft only when on the ground. 2. Liability insurance. Third-party liability, covers claims from third parties, people on the ground, injured by aircraft accidents. Passenger liability, covers claims from passengers injured or killed. Under Warsaw Convention, 1929, and Montreal Convention, 1999, airlines have strict liability to passengers. 3. Cargo liability. Covers airline liability for loss or damage to cargo being carried. 4. Loss of license. Covers pilots who lose their pilot/S license due to medical incapacity, protects their income. Aviation insurance in Nigeria. All aircraft operating in Nigeria must be insured under the Civil Aviation Act 2006. Nigeria Civil Aviation Authority, NCA, regulates aviation safety and requires proof of insurance. Key Nigerian Airlines, Air Peace, Ibom Air, United Nigeria Airlines, Green Africa, all required to carry hull and liability insurance. International airlines flying to Nigeria must also carry insurance meeting IATA standards. Major aviation insurers, Lloyd/S of London Syndicates, AXA XL, Allianz, Munich Re, all write aviation risks. Nigerian insurers, like NEM Insurance, Leadway Assurance, often co-insure or take a percentage of aviation risks with international reinsurers. Marine insurance in Nigeria. Nigeria External Trade Act requires that all imports into Nigeria must be insured with Nigerian insurance companies. This was introduced to keep insurance premiums in Nigeria rather than paying them abroad. Marine insurance is compulsory for importers taking goods through Nigerian ports. NECOM, National Insurance Commission, regulates all insurance in Nigeria including marine and aviation. Major Nigerian marine insurers, AISO Insurance, NEM Insurance, Leadway Assurance, Cornerstone Insurance, Mutual Benefits. Nigerian Insurers Association, NIA umbrella body for all insurance companies. Insurance companies cannot bear the full risk of catastrophic events alone. A single aircraft crash can cost hundreds of millions of dollars. Reinsurance is insurance purchased by insurance companies from other reinsurance companies to spread very large risks. Nigerian insurance companies reinsure large marine and aviation risks with international reinsurers. Nigeria Reinsurance Corporation, Nigeria Re-Government Reinsurance Company. Continental Reinsurance, Pan-African Private Reinsurer. African Reinsurance Corporation, Africa Re Pan-African Development Reinsurance Company headquartered in Lagos. Lloyd/S of London Syndicates, UK. Munich Re, Germany, Swiss Re, Switzerland, Hanover Re, Germany, largest global reinsurers. Summary of Marine and Aviation Insurance. 6 Insurance Principles: utmost good faith, insurable interest, indemnity, subrogation, contribution, proximate cause. Marine insurance types: cargo, ICCA, B/C, hull, freight, P&I. Cargo clauses: ICCA equals all risks, widest, ICCB equals named perils, ICCC equals major casualties only. Compulsory in Nigeria, all imports must be insured with Nigerian companies, External Trade Act. Aviation insurance types: hull, all risks ground and flight, third-party liability, passenger liability, cargo liability, loss of license. NCA requires all aircraft in Nigeria to carry insurance, Civil Aviation Act 2006. NECOM regulates all insurance in Nigeria. Reinsurance: insurance companies spread catastrophic risks with Nigeria Re, Continental Re, Africa Re, Lloyd/S.